Let's hope that these changes that President Trump are making are significant enough to at least encourage a little bipartisan support from the public and reunite the country under common sense. And, it's like I spent the first several years of my career talking to people your grandparents' age from World War II, and you understand the struggle and the hard work and their relationship with God and religion, their relationship with honesty and integrity and individualism and all of the things that were so important to those generations have completely and totally been forgotten. And, we go back to where we were the last 4 years. It's a very frightening thought for the future of this country. So I'm hoping at some point, even with all of the media pushback, that the country can see that the things that he is doing are actually for the benefit of this country, like lowering the cost of pharmaceuticals, like reshoring our critical infrastructure, pharmaceuticals, steel, AI, microchips, military or airplane parts. I mean, you can't fight a war if you're buying your military equipment from other countries, and you can't in a pinch help the sick if you're buying your pharmaceuticals from China. I mean, all of these things need to be done. In 1971, when Nixon closed the gold window, gold was $35 an ounce. So either gold has gone up, 1,000%, or the dollar's lost 99+% of its value. In other words, gold doesn't need to pay any interest. It continues. You can look at what the average cost of a house was in 1961. 1960 was $17,000. Gold was $39 an ounce, or $35 an ounce in 1960. So, it would have taken 435 ounces to buy that house in 1960. You can do this all through time, and you'll see it's almost consistent always. That 435 ounces right now is 1.2 or $3 million, and the average house in the United States right now is about 400,000 or less. It buys you 3 houses, right? And that's earning no interest for the last 60+ years. So you can go through all of time, and you will see that what gold does is it admirably keeps up with the standard of living. Inflation is just something that will be part of the fabric of this system. And when you see the Fed come in and purchase 30-40 billion worth of treasuries, 3 and 10 year, it again shows you that the demand for our treasuries, our debt is waning. We're a country that obviously, even with Doge, we can't get rid of anything meaningful in terms of debt. We're already at, well over $1 trillion in debt here this year. And it's only, May. I think that maybe, to your point earlier in the discussion, realizes that these tariffs are having an adverse effect on the economy. It won't work in the way that he is thinking. Look, it's one thing to put tariffs on our auto industry, right? I get that. I understand that. But to lay blanket tariffs across the spectrum, when we expect these countries to take our dollar and to reinvest the proceeds in our treasuries, is foolhardy. You can't do that. And it is that cycle of using the dollar as a settlement currency and using the treasury as a reserve vehicle. It is that cycle that allows us to have our standard of living, keeps our assets high and our rates low and our goods cheap. You move that away, and then the byproduct, the opposite of that, is high price goods, high interest rates, and a lower standard of living. And the higher interest rates and the high price goods put massive strain on the companies and the industries, right? Mass layoffs, more entitlement payments, higher inflation. This is hyper stagflation you're talking about, where the depression meets the printing press, because no one wants our treasuries. So the Fed comes in and monetizes the 3 and the 10 year. They'll start buying everything else up because no one wants it. And the companies and their goods are so expensive, no one can afford it. They're dying on the vine. Their valuations are so stupid high from 20+ years of interest rate suppression that when they finally do fall to find equilibrium in a rising interest rate environment and a slowing economy, you're talking, you're talking a collapse of the entire system. I really do believe that metals are now being looked at very differently as the foundation of solid, stable money free from counterparty risk. And that carries a lot of weight. And I think that is a trend we are moving into. And to try and hold back this global tsunami of demand is as stupid as a mud wall. It represents an existential threat to a lot of these banks, a lot of these funds that have chosen to go naked short. And if they were smart, they would do all they could to pull themselves out. I think some of them are, and understand that the pricing is controlled on COMEX, where in the snap of a finger, they can make oil negative 40 a barrel. Well, that's the futures market controlling the physical market, and that's not the way it's supposed to be. My guess is that there will be a move to centers like Dubai, centers like Moscow, centers like Shanghai, or this new BRICS metals exchange, ultimately, which will define the price. And I think the West is being exposed for what it truly is, a system that, is controlled by a handful of Western bankers, and it doesn't do any favors to not only the folks that accumulate commodities and understand what they are, but even more so to the folks that produce them. We're getting to an acceleration in all of this when we're seeing 35 tons of gold and almost 12,000 silver contracts, almost 2,000 tons standing for delivery. In the last contract, when we're seeing massive amounts coming since Easter, huge amounts on the last couple of contracts on COMEX, and now a lot of these contracts mysteriously cash settling. I think problems are certainly possible and maybe even probable in these exchanges. And in fact, Jim Willie was talking about Bank of America being right in the crosshair of this. And all it takes is one default on delivery to set off a daisy chain, and everyone runs to grab what they supposedly have in this rehypothecated system, and very quickly things blow apart. So I don't want to say it's imminent, but everything that you see would say, yeah, you see increased deliveries, massively increased deliveries, the biggest ever, and then issues with delivery delays and cash settling that would certainly hint at there being problems, maybe even significant ones underneath the surface. So, you're talking gold and silver that are being controlled by the futures market, but are using that subsidy, if you will, the smart people are, and standing for delivery in levels and amounts that the COMEX has never seen before. This is being ignored far too much, as far as I'm concerned. I think it certainly shows the pathway to where the biggest money think things are going. You don't see money like this standing for that kind of delivery in the billions of dollars if they are not convinced that holding it physically is prudent, number one, and number two, that it is perhaps moving in a upward trajectory over time. You can trust the system, leave it in paper, and leave it in a facility or in a ecosystem where arguably it's rehypothecated substantially, several hundred ounces or several hundred pieces of paper per ounce. Or you can take physical possession of it and remove completely and totally that counterparty risk. That is what it signals. And I think that's a bigger piece. I started talking about that with you a few years ago on the central bank level. Why are they all bringing it home from the Bank of England and the New York Federal Reserve, supposedly the epicenters of free trade and safety? I think you kind of look at like the concept of the fourth turning, a system that is kind of marked by a loss of trust and trust in institutions. And the more I think about the concept of the fourth turning and where we are in the cycle, it just seems to me that this is much bigger than just these particular tariffs. It's been a string of things that have been done that have eroded the trust and confidence, not only in the institution of the United States government, through things like sanctions, tariffs that are masquerading as sanctions, but also the irresponsible monetary and fiscal behavior, the massive indebtedness that seems to be continuing even in the face of Doge, which really hasn't amounted to much of anything. A couple $100 billion. They thought they'd get a couple trillion, and yet the trade deficit, or the budget deficit rather, continues to grow, and over $1 trillion military bill that is discretionary, borrowed, in other words. So the whole thing is much deeper than just these tariffs. I think that younger generations are looking for different ways of investing, and it's not just stocks, bonds, and real estate. Obviously, you have cryptocurrencies and other things that you see. Kids opening baseball cards online and making tons of money, doing all sorts of things that aren't just about traditional forms of investing, and that leads to these changes. And I think we are in this fourth turning in many respects, but I see it really in a system that can't be sustained any longer. This monetary system can't be sustained. The banking system can't be sustained. Maybe it's one of these big bank failures. It's bailed in ultimately, that everyone has seemed to have forgotten about. But the problems of rot underneath the system are as strong as they've ever been in the banking sectors. And so maybe it's a bank failure, and the systemic nature of everything that starts to daisy chain problems, severe problems. The concept of counterparty liability, David Rogers' Webb, The Great Taking, all of these things have kind of, under the Trump administration, been brushed under the rug. We don't hear about them anymore, but they haven't gone away. My guess is that there would be some sort of an event, maybe centered around the banking system, if I had to guess, and the fallout from that would wake people up.